Hello students, welcome to BYJU'S IAS. Welcome to a session on economy this week, wherein we will be discussing some of the very important articles that have appeared in various business related newspapers. And this particular discussion, I have taken the time period from 25th of February to 3rd of March 2019, and the articles that I picked up will be from Business Line, Hindu, Business Standard, Indian Express, Limit. Let's begin this particular discussion. The first article is related to recapitalization. In the last couple of years, especially the present government of India has announced a huge amount of recapitalization which it has decided to do in the banking sector. Now, what is the basic concept of a recapitalization? Recapitalization basically means infusing capital into the banking sector. Now, the government of India has taken a decision to infuse this kind of a capital into the banking sector so as to ensure that there is a healthy situation in their balance sheet. That is, over a period of time, there is a incurrence of a large amount of non-performing asset. There is certain conditions to be met under Basel guidelines. Bank has to ensure that it doesn't fall under the prompt corrective action, so on and so forth. So as to ensure these particular objectives, Government of India has decided to infuse capital into this particular banking sector. This decision is called as a recapitalization. Now, in the last year, that is in the last fiscal, the Government of India infused a huge amount of a capital, that is 90,000 crore rupees into the banking sector. But understand this, out of this particular 90,000 crore rupees, 40% of the recapitalization was done in healthy banks or strong banks, and remaining 60% was infused into weaker banks. And in this particular fiscal, that is fiscal year 19, the Government of India has decided to infuse or has announced infusion of a capital of 48,239 crore rupees. But this particular decision of recapitalization has been taken, and this particular recapitalization will be done only in weaker banks. Now, though Government of India on one side is taking a decision to infuse the capital into weaker banks, what are certain issues which are discussed in this particular article? The issues are the banks' NPAs have suddenly shot up. Now, question is why this particular NPAs have increased? One, the number of defaulters have increased. Second, the RBI very recently withdrew all the measures which were given to these particular banking to restructure the loan. What is this concept of a restructuring of a loan? Let's assume a standard asset, that is a loan, the repayment was being given to the bank. Suddenly, because of certain issues, the repayment or there is a default on the repayment. Now, the bank will restructure the loan so as to ensure that the repayment, though smaller value, will continue to happen and the asset will continue to remain classified as a standard asset. Otherwise, what will happen? This asset can become non-performing asset. And whenever it becomes a non-performing asset, ultimately, again I am using the term ultimately, the bank has to write off these particular non-performing asset by making provisions. Now, very recently what RBI has done? RBI basically stated that since there has been implementation of insolvency and bankruptcy code, there is no need of these kind of restructuring measures to this particular banking sector. So, it has withdrawn all these kind of restructuring measures such as 5:25, such as S4A, CDR, SDR, etc. Now, what is the impact of this? Whenever such restructuring measures are withdrawn, the bank has to declare these particular assets as a non-performing asset. And when the non-performing assets will shoot up, the provisioning requirements will also shoot. Not only this, whenever the NPA suddenly increase in the balance sheet of a bank like this, there is a scope or there is a danger that the financials of this particular bank will not be able to meet the conditions under the prompt corrective action. And as a result of this, the bank might fall under the prompt corrective action. And whenever the banks are kept under prompt corrective action, there will be certain restrictions imposed on these particular banks by RBI. One of the reasons why Government of India has decided to recapitalize the weaker banks is to ensure that it will not fall, or these particular banks will not fall under the prompt corrective action. Apart from this, the banks will also approach insolvency and bankruptcy code, and when they approach insolvency and bankruptcy code, they expect to recover the loan or part of the loan. In case of the recovery rates under IBC have been very lower. in the range of 30 to 40%. Since the recovery is very low, the writing off for the banks will be higher, and since the writing off is higher, again there is a danger that the bank might fall under the prompt corrective action. So keeping in mind all these conditions, Government of India has announced recapitalization of this amount only to the weaker banks. Now, what is the expected outcome? The Government of India expects that this particular recapitalization infusion will improve the financial situation of these particular banks, which will basically improve the credit offtake or revive the credit cycle in the banking sector. But this particular article says that in the recent times, the banks have started diverting their loans from high risky borrowers to low risky borrowers in the market. That has been the trend. And second, the article also says that even healthier banks such as SBI, Bank of Baroda have started diverting their loans from high risky areas to low risky areas. And that has to be reversed, which cannot be done by this kind of a recapitalization package. This is the gist of this particular article. The next article is related to import of pulses. Before looking at the points in the article, please understand this. Right now, at WTO, developed economies such as USA have filed 2 petitions or 2 complaints against Government of India's policies related to pulse imports. These 2 complaints are: one, regarding certain quantitative restrictions imposed by Government of India with respect to pulse imports, and second, with respect to the market price support which is given by Government of India for pulses only. Again, please understand, MPS is different from MSP. To calculate MPS, you require MSP. So market price support is different, market support prices are again different. So basically, on one side, countries such as USA have complained that India is imposing certain quantitative restrictions, and on the other side are underreporting their support prices. This particular article discusses the first point, that is a quantitative restriction. Earlier, that is 1 year ago, the situation was: one, the production of pulses in the domestic market was on the rise. Second, Government of India had a huge amount of a buffer stock which they were intending to release in the market. And third, the Government of India wanted to ensure that the farmers or the pulse producers will get right remunerative prices. But whenever the production increases, the supply to the market will also increase, and when supply increases, the prices will start coming down. And when these particular prices will come down, there is a danger that these particular prices will fall to a level which is lesser than even the MSP announced by Government of India. At that point of a time, the farmers will not be able to earn remunerative prices. Because please understand, yes, Government of India will announce MSP, but all the pulses which are produced will not be procured by Government of India. So majority of the pulse producers will be able to obtain a price or a market price which will be lesser than the MSP. Apart from that, Government of India also had a huge amount of a buffer stock which they intended to release into the market, which will basically again increase the supply, reduce the prices. In this particular situation, Government of India basically decided to impose a restriction called as a quantitative restriction. Now, what is this particular quantitative restriction? Under the concept of a WTO, please understand there are 2 types of a barriers. One is called as a tariff barrier and the other one is called as a non-tariff barrier. The concept of a tariff barrier, in simple terms, if an importing country increases the import duties, it is called as a tariff barrier. Whereas if the importing country, let's say, imposes restrictions such as a quantitative restriction, what is that? We'll just have a look at it in a minute. Certification restriction or phytosanitary measures. These kind of measures are called as non-tariff barriers. Now, what is this particular concept of a quantitative restriction, which is also referred to as a concept of a quotas? Now, let's have a look at this particular concept of a quantitative restriction. Basically, under this, Government of India announced that the total volume of imports of notified pulses will not be more than 1 lakh million tons. I'll repeat the statement again. Under quantitative restriction, the government basically stated that certain notified pulses imports will not cross more than 1 lakh million tons in terms of volume. Such a restriction is called as a quantitative restriction. Under the ambit of WTO, quantitative restriction cannot be imposed, or it goes against the theory of the principles under WTO. But basically remember this, until and unless a trading partner or an exporting country raises complaint, these kind of restrictions can be imposed. So what this particular article says is some of the countries have taken a note of these kind of quantitative restrictions imposed by Government of India and are expected to file complaints at a WTO. But the authorities or the representatives of Government of India are basically stating that this particular issue is yet to be raised by these particular countries, and since it is yet to be raised through the formal channels, till it is raised or resolved under WTO, these kind of restrictions will continue. And usually under WTO mechanism, whenever such issues are raised, it can be done through negotiations or can be resolved through negotiations. That is, imposing country, that is in this particular case India, will try to argue or justify the imposition of a quantitative restrictions to those countries which have raised this particular issue. And if those countries are satisfied, then these kind of restrictions will continue. If they are not satisfied, continue to press ahead with complaint under WTO dispute resolution mechanism, then Government of India will be asked to withdraw these particular restrictions. What if despite the judgment going in favor of or the order going in favor of a country such as USA, India continues to impose quantitative restriction, then India will be imposed with certain penalties. So these are some of the points which are discussed in this particular article. The next article is related to the GST and real estate. Very recently in the 33rd GST Council meeting, it has been decided to reduce the effective tax rate, that is the GST rate applicable to real estate sector. Now within real estate sector, please understand there are two types. One is ready to move in housing or house and under construction flats. Whenever a sale of a unit which is ready to move in happens, GST is not applicable here. Whereas whenever an under construction flat is being sold, GST will be applicable here. And again within this particular under construction flats, there are two types, affordable and non-affordable flats. Government of India has changed the definition related to the concept of an affordable flats. Now the Government of India, what it has done is basically connect the affordability factor with the cost factor. None of these particular flats which will be considered under affordable category will be costing more than 45 lakh rupees. And apart from this, there is another condition with respect to carpet area. So the definition of affordability has been changed, and as per this particular definition, Government of India says more than 80% of the flats in case of non-metro cities and more than 67% of flats in case of metro cities will basically fall under the category of affordable category. Now what is the advantage? Very recently the GST Council has decided to reduce the effective tax rate for the affordable flats from 8% to 1%, non-affordable flats from 12% to 5%. So this will be the effective tax rate which will come into force from 1st April 2019. Now why this particular decision has been taken by the GST Council? The GST Council basically found out that majority of the flats which are under construction in top 7 cities in India have remained unsold. Now already the real estate sector is reeling under certain stress because of reforms such as demonetization as well as GST. And upon this, if majority of these particular flats or under construction projects flats remain unsold, this will put a larger financial stress on the real estate sector. To boost the sales of these particular unsold flats or the new projects which will be announced, the GST Council has decided to reduce these particular tariffs. But having said so, two very important concerns have been raised in this particular article, that is whether this particular rate reduction will improve the sales of these particular flats or not. The two reasons which have been given here are, one of the reason why the sale of these kind of flats is reducing is said to be the developers. That is, whenever the sale is about to happen, the developers are promising something, but when the transaction happens or the buyers purchase the house, the delivery or the delivered product is either delayed or substantially different in terms of a quality and quantity compared to what it was promised. That has to be one of the reasons why the sale of these under construction flats is declining over a period of time. The second concern which has been raised is whether the actual rates or the market prices of these particular flats are going to come down or not. That is, though on one side the effective tax rate has been reduced to 1% and 5% respectively, the input tax credit which was earlier available to developers has been withdrawn. And since this particular input tax credit has been withdrawn, there is a fear that the developers are going to transfer this particular benefit which they are not going to get to the buyers in the form of a higher market prices. And apart from this, some of the states also have raised a concern with respect to leakage of revenues because of a withdrawal of input tax credit. So these are some of the points which have been given in this particular article. The next article is related to UNFPA report findings. Now very recently, United Nations Population Fund has conducted a study related to demographic dividend in India and has submitted this particular report. This particular article discusses some of the very important findings in this particular report. The important findings which have been quoted in this particular report are: 1. The increase in the working age group population. Please understand, the working age group which has been considered for this particular report is 15 to 59 years, and this particular article states that in the coming decades there will be a huge increase or addition to this particular group, which is nothing but the working age group. And as per this particular report, second point, the decadal growth rate, that is, what is the rate of increase in the population from one decade to the next year. Now usually this is referred to as a decadal growth rate, and the time period usually considered is a census year, that is from 1991 to 2001, 2001 to 2011. As per this particular report, the decadal growth rate for this particular period is 17.6%. And the report states that this is a good feature for a simple reason: it is more than 3 percentage points lesser compared to the decadal growth rate for this particular duration. But having said so, there is a term used here which is referred as a population momentum. That is the third point. The population momentum basically refers to a situation wherein there is a decline in the rate of a growth of population, but nevertheless the overall population is increasing. I'll repeat the statement. Population momentum basically refers to a situation wherein the rate of growth of population is declining, but overall population keeps on increasing. This is the third very important observation which has been made in this particular article. As a result of this particular population momentum, the report states that India's population will keep on increasing and will hit an all-time high of 166 crores by 2060. And after this, it will start declining. That is, the population will start declining. That is the third very important point. Fourth important point is related to the total fertility rate. As per this particular report, in majority of the states in India, the total fertility rate has fallen down except in 7 states, where the TFR even today stands at 2.3. Now, what is this particular concept of a TFR? Children per woman is called as a TFR. In case of India, the replacement rate that is usually considered is 2.1. And in majority of the states, the TFR has fallen down to less than 2.1. But in 7 states, even today it remains to be more than 2.3. But the silver lining in these particular states is that the rate of a decline in TFR is increasing. Have you understand this particular statement? The rate of decline in the TFR is also increasing. So this is the fourth point. And fifth point is that between 2000 to 2030, or to be more precise 2031, the addition of population to working age group will be 390 million. So these are the 5 very important findings in this particular report. Now, what is the inference? The article basically states that since the Indian government wants to harness the demographic dividend, it has to formulate the policies or plan accordingly, which takes into consideration all these particular parameters related to the demography. And not only this, the report also states that the same kind of a study has to be done at the state level also. So these are the 2 very important inferences that have been derived from these particular facts. The next article is related to CPSU and solar energy. The government of India very recently expanded a scheme called as a CPSU scheme, under which earlier there was a target of installing or having a solar generation capacity of 1 gigawatt, and as per the latest report, around 800 megawatts of generation capacity has been installed under this particular scheme. Now the government of India basically has expanded this scheme from 1 gigawatt to 12 gigawatt. And not only this, some of the very important numbers related to this particular scheme is, one, the duration within which this particular scheme will be implemented will be from 2019-20 to 2022-23. So this is the time period. Second very important point, Government of India has announced a viability gap funding of more than 8,500 crore rupees. Now what is this particular concept of a VGF? Whenever infrastructure projects have to be implemented, the need for the capital is very high. So since the need for the capital is very high, many of the times there will be delay in the implementation of these particular projects. In this particular situation, the central government, or even in cases the state government, will announce a financial support. This kind of a financial support given by the government to implement infrastructure projects is called as a viability gap funding. So in this particular case, Government of India has announced a viability gap funding of more than 8,500 crores. And the third point, this VGF will be provided to the CPSUs, Central Public Sector Units, which will be using domestically manufactured solar modules. That is, domestically it has to be sourced. So these are some of the very important points related to this particular scheme. Now, what are the issues? The issues which have been raised are, one, earlier under the Jawaharlal Nehru National Solar Mission, same kind of a condition with respect to domestic sourcing norms was imposed by Government of India. Now the question is, even under this particular CPSU scheme, the VGF is connected to the domestic sourcing. Will this hold out if any other country challenges this particular condition under the WTO dispute resolution mechanism? Because earlier when it was imposed under Jawaharlal Nehru National Solar Mission, US challenged it and WTO ruled in the favor of USA. Now the question is whether this will hold still or WTO will give a ruling in favor of Government of India. But having said so, Government of India basically stated that the CPSUs are not profit oriented, these are welfare oriented. Hence, this kind of a VGF can be provided with the domestic sourcing conditions. Second, there has been certain question raised with respect to domestic manufacturers itself. That is, in case of India, understand the concept here. Usually first the cells are manufactured, then using the cells modules are manufactured. In case of India, the total capacity to manufacture cells is said to be 3 gigawatts. But please understand, the module manufacturing capacity installed in India is 9 gigawatts. But out of this particular 3 gigawatts, only 1.5 gigawatts is operational. And out of this particular 9 gigawatts, this is again for cell manufacturing, this is for module manufacturing. Out of this particular 9 gigawatts, only 3 gigawatts is functioning or operational. So basically there is a difference between how much there is a need to manufacture the modules and the supply of the cells. That is also one of the reasons why there is a huge import of the modules and there is a huge import of cells into the domestic market. And these particular cells are considered to be very cheaper in terms of pricing. So there is another issue whether the domestic manufacturers can match this particular value in terms of a cheaper imports. And third issue which has been raised is the technology which has been used in the manufacturing of these particular cells as well as the modules. The technology that is used in case of India is said to be very old or outdated technology, as a result of which we are unable to meet the demand for either cells or modules in the domestic market. So these are some of the issues which have been raised with respect to this particular scheme implemented by government. Although government is providing the VGF, this particular VGF is unlikely to overcome these particular issues. That is the gist of this particular article. Now let's have a look at the questions. The question number 1, the phenomenon where the fertility rate is declining and the population still keeps increasing is referred to as, we have taken this particular term already, the population momentum. The second question, the effective rate of a GST on affordable housing has been reduced to 5%. No, this has been reduced to 1%. 5% is unaffordable housing. So first statement is wrong. Second statement, cost of the flats as per the new definition of affordable housing has been fixed at 50 lakh rupees. No, it is 45 lakh rupees. So both the statements are wrong. Right option will be option D. Both are false. So these are some of the articles as well as the questions for this particular time period. Thank you. Have a good day.